Autumn is upon us and the markets are heating up. The world's central bankers have abundant food for thought following last week's epic US CPI print. How will the money men handle the pressure? With the Fed, BOE, and S&B in action, we're soon to find out. The coming 5 sessions are all about the bankers. Sprinkle in Tuesday's EU CPI release, and we're in for a wild ride ahead of Friday's bell. Anytime things are poised to get crazy, it's best to simplify our trading approach. Let's look at 3 potential movers and shakers: the Euro CAD, NASDAQ 100, and Great Britain Pound Swissy. EU CPI for August is due out during Tuesday's London session. The big figure we are looking at here is CPI year over year. July's figure reached 5.3%. Will August show a market decline? The ECB sure hopes so. More rate hikes aren't what Lagarde and company want going into Q4. Thus far in September, crude oil has been on fire. For that reason, the Canadian dollar is our target dancing partner for the euro. Our key market is the Euro CAD. Now, as you can see, we've got a very, very tight yearly range right here. We have a key Fibonacci level right around 142.61. We've got a double bottom in the monthly. If we do get an opportunity to buy down there right around 143, it's worth looking at in the Euro CAD. Midweek and mid-month trade will be all about the U.S. Federal Reserve. Wednesday's the big day. Will it be another quarter-point rate hike or hold the line? Following the US CPI release, the CME Fed Watch priced in a 91% chance of no hike. If we see rates held at 5.25% to 5.5%, stocks could definitely push higher. The NASDAQ 100 will come alive Wednesday. New all-time highs by the end of Q3. Anything's possible. Our key markets, the NASDAQ 100, as you can see from the chart, all-time highs are brewing. 16,764. We're right here in a 3-month compression pattern. As you can see, 78% of this macro move off of all-time highs down to our swing lows of last fall. You can see we're in deep compression right around 78%, of around 15.5. It looks like we're getting some bullish sentiment. Don't be surprised if we make a run at those all-time highs sooner rather than later. Thursday. Is anyone up for more central bank action? The Swiss National Bank and the Bank of England are due out with their rate decisions. Inflation continues to run rampant in the UK, prompting many traders to price another quarter-point rate hike to 5.5%. The real question is, what is the S&B planning? Is it north to 2% or stand pat at 1.75%? The S&B is the real wild card. We'll be looking to profit on franc pairs as the action unfolds. Key market we're going to look at is the Pound Swissy. Take a good look at this chart. This is absolute rotation. We are trading inside of last October's range over almost a year inside of that monthly range. Now, as you can see, this is what I call a picket fence. It is just chopped up and down and up and down and up and down, exceedingly tight. Typically, markets coil up before they break. We're not going to be looking to play a break here. Take a look at this right here, our yearly low, this little red box. That's our yearly range. It's even tighter than last October. If we do get an opportunity to bid the bottom of this yearly range, we almost have to take it. Until proven otherwise, this market is flat. We're looking to bid 110s right there just above the yearly low, potentially after that central bank activity. Former Vice Chairman of the Federal Reserve, Alice Rivlin, summed up the role of central bankers succinctly. The job of the central bank is to worry. This week, it's a balancing act as the world's monetary hierarchy walks the tightrope between balancing inflation and promoting maximum employment. Inflation remains the #1 threat to global economic stability. Will the bankers stay aggressive, or will they exercise patience? Either way, we'll be looking to cash in. All right, it's quiz time. Who was the chairman of the United States Federal Reserve on Black Monday 1987? Was it Ben Bernanke, Janet Yellen, Paul Volcker, or Alan Greenspan? Post your best guess below. If you're just getting started in the markets or feel hopelessly lost, check out our trading room. The new TST trading framework may be just what you're looking for. Download a few EAs and you'll be up and running with a tangible way of addressing the market. All right, that's it from here. Trade well, and we'll see you in the markets.